Hey team, in this video we will be analyzing and forecasting the market for gold from a technical and fundamental perspective for 7 and 8 January. So let's begin with a recap. Here the market was trading some around 1958 till some around 1940, where we have given signal to go short, and since this gap which the market have made on the Monday opening, since then we were continuously saying to go sell gold some around 1938, or if the market do break this particular resistance, keep selling the gold, as the gold would finally or would eventually come or show us a bullish momentum, as we did see a bullish momentum, a huge sell off from some around 1958 till some around 1900, a sell off of some around 58 points within a few hours, which is a big deed, and this is some around 500 pips movement or 580 pips movement in the market of the gold. And we can see clearly that the market did close this particular bullish this particular gap which the market has made. Now coming on to the current forecast and our take profit of this particular sale, which we have suggest to go long to go short after a break through this particular resistance zone, have hit our take profit. Now coming on to the current trading opportunities is that now we have changed our momentum from being bearish to bullish. First suggesting or first highlighting why we did see a sale off. So the sale off was due to the Georgia runoff and the confirmation of Joe Biden being the next president of United States. And now why we did see this particular bullish momentum entering in the market is due to the fact, as the news of the next president or the next United States president Joe Biden was announced. With that, the party members also announced that the let me first make the arrow. So with that, we have seen that the Democrats have promised to give a stimulus package worth $2,000 to every single individual in the US. Due to the stimulus packages, due to the promise of stimulus packages, would depreciate the price of the dollar, and that would act as a catalyst to increase the prices for the gold. Thus, we have turned or changed our momentum from being bearish after hitting our take profit of 1900 target, and now we are more bullish into the markets. Another important fundamental is that as the news of Democrats came out, they have said that the first or the primary legislation which they will provide, which they will decide after coming onto the power, would be the stimulus packages worth 2000. Now coming onto the technical perspective, so here on the screen you can see that I have highlighted this particular ascending channel, and the market on 13 November did made this particular support. Then on 15 December we did see a retest towards the support. Then on some around 23 December we did see a retest. Then on some around 29 till some around 30 December we were seeing some choppy momentum in the market in a range on this particular support trend line. And now recently we can see that the market is retesting this particular support trend line. Now what a trader should do is that we would be looking for going long on the market, with our entry trigger point would be some around 1912, with our stop losses would be placed some around below this particular support zone, which is some around 1891, and our first take profit of this particular trade would be placed on this particular resistance zone of 1937. This will give an extra out of approx 1:1.18, and our second take profit or our final take profit would be placed some around 1958. This will This trade will give an extra reward of approx 1:2.19. Now coming on to the bearish scenario, if we hit a stop losses, so no need to worry. We would be looking for going short on the market if we hit our stop losses, or the market did closed below some around 1883. That would be an indicator that the market bullish momentum has over, and we can see a continuation of this particular bearish momentum. Thus our entry trigger point would be some around 1885, with our take profit would be placed some around 1856, and our stop losses would be placed just above the resistance zone some around 1903. This trade will give an extra reward of approx 1:1.66. Do keep in mind we would be looking for more bullish scenario rather than bearish scenario, as I am more firm that the market would show us more bullish potential, and we will see a retest over this particular resistance zone. If break, we can see that the market would be retesting on this particular resistance zone. If you are new to the channel, so do consider subscribing. If you like the video, do like, share and comment below. Thanks for watching.